In today's video, we're talking about this crazy rally from the EURUSD ahead of Thursday's ECB and Friday's NFP. We'll also take a look at the DXY. So we're going to run through some key levels, and I'll show you an area that I think traders need to pay close attention to as we finish out the week. But looking at the euro, guys, obviously a very aggressive rally so far this week following last week's 2025 open retest. So just to kind of recap, last week what I was doing here on this pair is I was shorting on this break right here. All right, so right through here, I talked about this in VIP. I announced my entry in real time. I was shorting through here. There was a 4-hour break and retest, and that's what I was shorting. I got out half down here in this area, and the rest of it I got out through here on the way up. Okay, so still a very profitable trade. So far this week, though, I really haven't traded too much just because even though this has been a very aggressive rally, it has been, at least for the way that I trade, a little bit difficult to get into, simply because the market really hasn't pulled back. Every single time it closes the day, like back here, I didn't want to long this simply because we had resistance just above, right? Then we got the close up here, and we got a slight pullback here into 106.15, another level I've talked about. Even though you could have longed this, it's just not my style of trading. It's not my edge. So I passed up on this, and now we're seeing the market just rocket another 1.5% higher today. So it's just really been straight up this week. Again, so, if you are a trend trader, this has been a really nice move for you, hopefully. But I do think, though, that looking at the weekly time frame, this is kind of where traders have to start paying attention because we do have the ECB coming up on Thursday. So a rate decision there, and then on Friday we do have NFPs. So there's a lot going on over the next 48 hours that could influence the rally that we're seeing here so far. Now, even though you can see where the euro is coming into these lows back here that we talked about, and by the way, actually, before we talk about this, let me just mention too, that this move that we're seeing so far this week is something I've alluded to in previous videos, just because I talked about this November breakdown back here and how we had a very shallow retrace into this area. So this move that we're seeing, and let me just be clear, I am by no means saying that I was calling for this move because this has been a lot more aggressive than what I thought we would get. But I did think that a move up here toward this area, right, to fill in this imbalance back here was likely over the coming weeks. Again, I didn't think it was going to happen in 3 days. I thought maybe something like 2 or 3 weeks, but, here we are. Now, let's talk about where, bulls have to be a little bit careful going into Thursday and Friday's events. And this trend line here off of the low from back here in November 2022, this is the trend line that we talked about as the euro was breaking down. So through here, when it was breaking down, we talked about this trend line, and this is where I started to mention my targets down here in this area. And so now that we've seen the euro go sideways here and kind of bottom and start to rally so far this week, this is the area now that you have to pay attention to, right around 1.085 all the way up to 1.09. And another reason too why 1.085 is going to be significant is if you look here at the daily time frame, and you look at this range here. Okay, so these highs back here and these lows. If you take the height of this pattern right here, all right, whether you call it a triple bottom or just a rounded bottom, it doesn't really matter. But markets have a tendency to travel an equal distance to the pattern that they just broke out of. So in other words, if you take a look here from the low up here to these highs, you get approximately 310 pips. Now, if you take that same distance from this breakout point, measure the same distance higher, what you're going to see here is that 300 to 310 is right around 1.085. So this is very close to the 2022 trend line. Right, so you can kind of see how this is coming together now, where this is going to be a very significant resistance area up here. And so the question is now, is this the beginning of something more? Okay, is this the beginning of something more in terms of a macro bottom for the euro? Or are bulls going to get themselves in trouble bidding this into resistance ahead of the ECB and NFP? And the jury is out for now, right? But here is what I'm going to say about this. And this is going to be controversial depending on your view of this, but in these situations, what I find is that a lot of people will tend to get bullish the higher that this market goes. And they start to cast doubt on anybody that talks bearishly about it, right? Or the potential for a reversal. However, when you look at this market, right, and you look at moves like this here, in my opinion, the closer we get to areas like this back here, right, the more cautious you have to become. The same thing with the move down here toward that target that I talked about following the breakdown last November. So once you're down here, right, this is not the time to be bearish. The same thing up here. This, in my opinion, is not the time to be getting overly bullish. If you were getting bullish down here, right, or especially on the break of these highs, these range highs back here, then obviously this has been a nice trade. But right now, okay, as the market approaches this resistance area up here, in my opinion, it's never financial advice, of course, but in my opinion, this is not the time to be getting bullish on the euro. All right, I'm not saying that it can't move higher than where it is right now, because again, I do think we are going to see that push up here into the 108.50 to 109 area, especially with those events coming up. But a reversal from here would be really interesting for a potential reversal for the euro down here towards some of these key levels, right? Now, at the same time, though, if we were to get the euro coming up here and retesting this and then just taking this out, then that, of course, would be bullish. If we see the euro start to close high time frames up here above that trend line, then that would be bullish, because now you're dealing with a larger fake out pattern, okay? So that's also something to be aware of. But as I always say, though, it's going to be resistance until proven otherwise, all right? So what I'm looking for here from the euro, and this is just based on the way that I trade. If we were to see the market come up here and tag this area, okay? First of all, blindly shorting the market, especially this kind of momentum, is always a bit dangerous. So one thing that you could do, and again, this is not, financial advice, but you have this key area right back here. And we know it's a key area based on the way today's price action, the intraday price action, reacted right here around 1.0777. So if you then see the euro come up here and tag this area over the next 48 hours and then close back below this, all right, that right there gives you a failed breakout and exposes some of those lower levels. So that's just one way to approach this over the next few days. And like I said, though, any close above 1.09 on the high time frames, I think would start to look a lot more bullish for the euro. Now, looking at the DXY, obviously the US dollar has been hammered so far this week. We saw a breakdown from this falling wedge here. And in fact, the way last week closed here, you can see where we did get the close above this pivot through here. And this right here, okay, these 2 days, this is why I'm always saying that you have to be very careful of end of month moves. All right, so we did get the close above this area. However, this green candle right here was the last day of February. And so this is why I'm always saying you've got to be careful with end of month moves. And this up here was a failed breakout, in my opinion, at least above this horizontal around 107.18. Now, unfortunately, though, like I mentioned with the euro, there really was no opportunity to take advantage of this, at least for the way that I trade, because we never got a retest up here. So if the market had broken down and then retested here, then that could have been an opportunity to get short the US dollar. But we never did get that. Instead, the market has just been straight down over the last 3 days. So again, very, very aggressive selling here for the DXY. And the market's even blowing right through this 104.60 area that we've talked about. So you can see that on the weekly back here, we have this high right through here. And also even on the monthly, this was an open FVG going back here to October. So this was the October high, never tested through here. You can see where we are getting that fill so far today. But again, so far, no sign of a reversal, right? So this is where, and this is how I trade, guys. And I talk about this a lot in VIP. We talk about this every day in Discord. But I don't ever look to, blindly buy stuff like this. And if I do, it's a very, very, very small position where I'm looking to scale into the market. But what I look for instead, at least to get in with a full-size position, is I know that this area back here is going to be key. And I know that because of the way the market reacted here earlier today. Okay, so I know that this is going to be key. So all I'm doing from here to see signs of US dollar strength is I don't care how far down we go. I don't care if we come down here to this low. I don't care if we take that out. What I'm looking for is a reversal and a reclaim of this level. The same thing with this area up here. If we started getting reclaims like this, okay, over the next few days or weeks, then that right there is my sign to start looking for US dollar longs. And I know what the comments are going to be like on YouTube. People are going to be saying, why are you looking for US dollar longs when the market is doing this? But again, just like I mentioned with the Euro USD, this back here, okay, this right here was the time to be getting bearish on the US dollar. The more aggressively this market sells off like this, the more likely it is that we are going to get an aggressive bounce eventually. Again, whether it's from here, whether it's from this low, whether we sweep this low, it doesn't matter. But the further down we go, the more aggressively this market pushes lower, the more likely it is that we are going to get an aggressive bounce. And again, it's just the way that I trade, right? That's the way I trade. It works for me. I am not a trend trader. I am a fake out or deviation trader. So looking at the DXY, again, we are pushing below 104.60. Obviously, where this week closes is going to be critical in relation to that level. And we also have lows like this back here. So off of this low, you can see right around 103.37. That could be the next stop there. Potentially a retest down here or even a sweep of this low before we get some type of bounce. But again, guys, you've got to be careful because, I know right now it seems like this market is just a one-way street. And so far it has been. However, this is not where, in my opinion, you want to start chasing markets. The same thing for the EURUSD. The closer this market gets to areas like this up here, I just think you've got to be really careful, especially looking at the weekly time frame. This is a very significant level that goes back to 2022. So the odds of at least a short-term reversal from here are pretty high, in my opinion. It doesn't mean that the market can't reclaim this, but you better believe that sellers are going to be trying to defend this area. And one last thing too, guys, before I sign off, I do want to mention that there is some confluence up here as well. So if you look at this range from back here, the market spent essentially, 2 years going sideways. And if you look at this range, if you look at the high back here, so this high down here to the low, the 50% of this, okay, so from the high up here down here to the low, if we take our fibs, you can see where the 50% comes in right there around 108.60. Now, that's also very close to that trend line we just talked about. And additionally, if you take something like visible range in TradingView, I believe this is a paid tool. I'm not sure that it might be free now. But anyway, this right here is showing you the point of control. So what this shows you is the amount of volume traded by price. So typically you have volume down here that shows you volume by time. This is volume by price. And what this is telling you, this white line through here, this is showing you that this right here is the point of control also at 108.60. This is the highest volume price traded within this 2-year consolidation, okay? So again, you've got this area up here between 108.50 and 109 that there is a lot of confluence in this region to pay attention to over the coming days.